Good afternoon, this is Clark Neighbors with BIS Commodities on this happy Halloween, December 31st, 2014, giving a summary for the week ending the 31st. Trick-or-treat week. It's been a trick-or-treat month. Just to go over some prices here for the week, December corn's up 23 cents, November beans up 69 cents. December wheat up 14. For the month of October, and keep in mind the lows were close to that time frame, December corn's up 57 cents. November beans up $1.33. December wheat up 55 cents. Just a kind of a summary also. Live cattle up about 275 for the month. Dow Jones is up around 350 points, ending the month nicely. Crude oil on the other side is down well over $13 a barrel. A lot of that stems from the lowest level in crude going back, I believe, to 2010. At the same time, the dollar index is at the highest level going back also to 2010. Now the storyline for the last week is the meal, soybean meal, up $90 for the month. Up $40 this week. Now keep in mind a $90 gain in meal is about a 25% return if you look at the value of the contract in 1 month. Now the story of the meal kind of goes something like this. When we entered harvest, pipeline was very empty, as we know, with tight stocks, tight carryout. There was just enough harvest delays, especially in the eastern corn belt, to delay the bean harvest, to fill that pipeline. Then the farmer was selling a smaller percentage of crop than he typically does. And then lastly, but probably most importantly, is the transportation via rail, especially in the east, was very difficult for that meal to get from the crusher to the end user, i.e. the poultry feeder, the pork growers and so on for feed needs, and thus you had this huge spike in meal, pulling the beans along with it, pulling the corn and the wheat along with it. In my time in the business, I don't recall a time like this where meal has been the tail wagging the dog in all the entire grain complex. It's been many years over time where meal has led the bean complex, but typically not everything. So this is a very extraordinary time, extraordinary situation, especially given, oh yeah, by the way, we have a record crop. So for 2-3 weeks now, the market is not focused on supply or the potential carryout or the potential size of the South American crop. And as we go through with that, weather's going to be key as you go in South America. But I think we need to be kind of careful getting on this wave thinking, oh, this market has nothing to do but go higher, because the situation can get fixed at some point. Keep in mind, a lot of meal is being double booked. Some of these plant people are buying meal via truck, also via rail. It pencils in to bring meal out of South America into the East Coast. The problem with doing that is just the logistics of making that work in a timely fashion, and also finding space and logistics to get it to move once you have it at port. Also keep in mind, when you talk about the logistical transportation issues we have here in the United States, there is a feed wheat vessel that was loaded in England here in the last week. It's on its way to the East Coast, Carolina coast. And the main reason that feed wheat was bought was just for logistical reasons, because you have more confidence in that showing up on the East Coast, coming across the Atlantic Ocean, than you do feed wheat coming by rail out of the U.S. So this rail situation, this transportation situation, is something that's going to need to be watched, not only short term, but longer term. But in the meantime, don't lose sight of where this market is, what kind of rally we've had, whether you need to reward it or not if you're a producer, because this market's had a pretty nice gain. It gets down to the point of we have this huge crop and this huge supply, but is it available or not? And between the lack of farmer selling and the transportation problems. Short-term availability has been a little difficult. So we'll see where this story breaks out. Longer term, it's hard to get very excited. You could run into a situation where we're actually trying to ration our demand with higher prices in a year where we have a record supply. So we have to be careful with where those match up. Longer term, that looks fairly bearish. Shorter term, we'll see how this plays out. But again, supply versus available supply. Now, I mentioned earlier about the supply and demand update. We haven't talked about production carry out for a while. I think that'll change next week as we get into November. November 10th is the next supply and demand and production update. We'll start seeing some private estimates next week as we come into the marketplace. So keep that in mind. But just remember, if you go back and look where the price of corn is today, it's the highest level it's been since the 15th of August, I believe. And on the 15th of August, we were assuming a 167 bushel corn crop nationwide. The October USDA number was 174. Carryout's 500 million bigger today than it was in August. If you want to reflect that against the beans, in August, the average, or the USDA said the average bean crop was 45.4. The October number was 47. There's still many in the trade thinking that number has to go closer to 50 bushels. We'll see. So, the raw fundamentals haven't tightened. Yes, we have very good demand on beans in the export trade and also in the export meal trade. But keep in mind this production side is going to be key. And November 10th, we'll get an update on that. Now, going forward, if you're a producer, a couple things to watch. Over the next 3 weeks, the market will be concentrating on finishing corn harvest. Come Monday, most feel the corn crop is about 60% harvested nationwide. So we have a fair amount of corn crop to come out, especially in the northern part of the Corn Belt. That's going to diminish bean movement. That's going to diminish any signs of that. So don't be surprised if bean basis has some improvement between now and, say, Thanksgiving, between now and river closing if you're in the upper Midwest along the upper Miss, as we may see some barges that need to get covered for some of this export business we have going out before the river closes. So basis opportunity between now, Thanksgiving, maybe the early part of December. That should give an awesome opportunity, as it does many years, to sell most, if not all, your cash beans. There's not a lot of carry in this bean market. The market's not telling a producer or an elevator to hold on to these beans. So keep that in mind. A good basis pop next 2-3 weeks is an excellent opportunity to get rid of these cash beans. Corn, on the other hand, you get pretty good carry in the corn market. We have had for new crop as far as carries in the board all through the summer, all through the fall. We saw some slight narrowing of the spreads this week. I think some of that's just due to we haven't seen this widening of basis at harvest time as you would typically see. Even with this big crop, a lot of that has to do with harvest being spread out enough that it hasn't had a situation where we've had logistical and space issues as a general rule through the Midwest. Now, there are some pockets where space is at a premium and things are very tight, especially in parts of central southern Illinois and as you go on east, and there's other areas like that. But as a general, harvest has been spread out enough, thus causing the carries maybe to tighten in a touch, taking away some of the cash carry in the corn. But bottom line is, with this rally in the corn, consider looking at some puts if you're a producer, hedging some of this corn, potentially looking for better basis down the road depending on where you're at. But long story short, getting rid of beans short term in the cash market is what the market's telling you. As far as corn is concerned, there's carrying charge in the market. The market's kind of saying space out your corn sales if you're a producer. Again, the highlights next week should be the talk going into the November 10th crop report. Again, watch the craziness of the meal. Now, this meal story is getting old really quick because it's kind of the same story we've heard for 10 days. Okay, so it's not like it's fresh news. But the market will be attuned to the meal situation. Also, South American weather. Most feel South America is about 30% planted, or Brazil I should say, 30% planted on soybeans versus an average of about 37, so they're a little behind on bean planting, but supposedly making up some very lost time as far as planting is concerned. Last but not least, the momentum of this market, the technical momentum of this market has changed, at least short term, maybe not long term. If we see some change in that technical side of the market, that's where the heaviness of the supply and demand may kick in. But until we see some pressure via the charts, it feels like this momentum continues to be pretty solid, at least in the short term. If you have any questions, feel free to call us at BIS Commodities. Phone number is 800-373-2525. And with that, we hope that the month of November is also a treat and not a trick. Have a good weekend.